Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq 100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me is Mark Marex, Senior Index Specialist with Nasdaq Index Research, to discuss Fan Mag earnings, of course, the heavyweights in the Nasdaq 100. And Mark, what's so interesting, they had really good quarterly reports, but that didn't move the needle as much as the jobs data and the tenure coming down.
Yeah, it's a really funny time we live in, right? Earnings are supposed to move stock prices more than anything else. In the case of these companies, I think what you'll see on this first chart is that, since end of August, basically, most of them have gone nowhere. The big exception being Google in the green there is up, 46% since the end of August. They've obviously had a bit of an acceleration that I think that the rest of this group had earlier last year. I think the market foresaw that the pandemic was going to be a huge, not just immediate boost to top and bottom line numbers for these companies, but was going to persist also for some time longer. So, we looked at this chart last earnings season about 3 months ago when earnings were getting underway. It was a similar story back then. You strip out Google, the average was close to zero, the average return here since the end of August. That continues to be the case. You can see Netflix is down a little bit more than the others, and maybe Microsoft is up a little bit more than the others. But it's really been, for this big group in the Nasdaq 100, it's been Google leading the way in terms of driving index returns to a record. The other big 5 companies in this Fan Mag grouping haven't really been driving overall index returns this year.
All right, Mark, let's go through the next couple of charts here. We'll start with Facebook and Netflix, dive into those earnings.
Yeah, so just to give you the summary number for this group of 6, revenues up 37% year over year for the most recent quarter, net income up 128%. Really just phenomenal growth when you think about how big these companies are already. The fact that several of them have been around for many decades, the fact that they're still putting up this kind of year-over-year growth in top and bottom line is really, really impressive. And again, speaks to that, we think, fundamentally strong story that underlies the Nasdaq 100 index. Facebook, revenues up 48% year over year, net income up 94%. Netflix, revenues up 24% year over year. That's the one out of the group that I think, because the pandemic may have provided some kind of temporary demand boost for Netflix, given that they only really offer one product, they're kind of the odd man out in terms of revenue growth year over year, not as spectacular, but look at the net income story. I mean, up 141% year over year for the most recent quarter. So fundamentally speaking, from a PE perspective, that company's getting cheaper as well.
All right, and back to Google and Microsoft.
Yeah, so on this next one, Google, really, really impressive quarter. I think they came in something like 50% above the highest street estimate for net income per share, 162% year-over-year net income growth, 35% year-over-year revenue growth. Microsoft didn't hit it out of the park quite as much. Their revenue was up 19% though, net income up 44%. Again, considering how old and big of a company Microsoft is, nothing to sneeze at in terms of those growth numbers.
And we'll wrap with Apple and Amazon. I think, Mark, the story here is what they did with their revenue numbers.
Yeah, I mean, Apple, I think, was the first company, maybe outside of Saudi Aramco, to put up a 100 billion plus quarter in terms of revenue last year. They didn't quite hit that this most recent quarter. 4Q tends to be strongest for names like Apple and Amazon, given the holiday shopping season, but still 90 billion of revenue this quarter, 44% year-over-year growth, net income up 220%, and then Amazon revenue up 54%, net income up 110%. Really, again, just extremely, extremely strong fundamental performance. It doesn't matter that you're comparing it to 1Q last year, which is when a lot of companies started to take a hit from the coronavirus pandemic. Again, as we said, that was an accelerator. That was a demand and bottom line booster for most of these companies. So the comparisons, I think, are pretty rational to be making year over year. And what can we say? I mean, the growth, the numbers speak for themselves.
Yeah, that's a really good point that you make, Mark. Appreciate the insight. As always, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.